Pennies Going in Raw is a production of iHeartRadio. The opinions expressed in the following podcast are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide education and entertainment about the financial industry and the stock market. Enjoy!
On this episode of Pennies Going in Raw, we discuss this week in the market, more fundamentals, and viewer questions.
You find out life's this game of pennies.
Oh, you guys know we only have a 40% runner. Hello, 40% is a fucking killing.
We've been compliant for too long. It's time we go to war.
I don't have a Roth.
Hugh knows so much about the market that his brain doesn't have enough room for grammar.
Hey, who told me about IDEX? It's going up a shit ton now.
Rob, 4%, baby. No way. 4 fucking percent.
You asked the exact same question with 2 words different.
It's like, man, I just got dick whipped for like 20%, and now that f***er's up like 50.
I bet Warren Buffett never did that.
I'm just making this voice memo to call out unusual whales to a fight. The pennies we need are everywhere around us. Pennies.
Going in Raw.
Featuring Dan, Deity of Dips, and Hugh Honey.
Produced by Vinny.
And Christian.
Let's go, baby.
Welcome back to another episode of Pennies Going in Raw. Today is Sunday, September 11th, and market's going up. Friday ran up by $6 all the way to $4.06. Recording this on Friday in the after hours. Definitely, it seems like we're kind of getting on the right track. We have 408 or close to it. But yeah, last time we talked, we were talking about, we're back on the downtrend, but now it looks like we're on a steady path up.
Yeah. I mean, we reclaimed that like 405 area, which we really wanted to see, especially it closing. The weekly candle closing this high up is really, really good. Now, I'm kind of thinking that we go test that 419 area. Like the way that it's looking right now, that's what I'm kind of looking for, and then I'll be looking to see how it reacts at that 419. Because we do have a few gaps below, especially after today, but I think that's possible that we go test anywhere from we'll definitely test 411, but I would honestly really like to go see us test that 419. I think that would be really good, and yeah, so that's what I'm kind of looking for, and then depending how we react there will be interesting to me. Will be, really interesting to see how we do at that point,
Is there anything kind of causing this, or is this just like the flow of the market, the technicals are setting up for it, et cetera, et cetera? Yeah,
we were pretty oversold. And that's what I mean is that I think that at the bare minimum, we got to get to 411. But see, the issue is that when you have these aggressive moves down, like we did last week, it really does a number on the technicals, because they go from, let's just say, neutral to, hot really fast. And so those are the type of situations. Then, of course, what was it, last Thursday and Friday, we had that little bump up and then we sold off hard again and again. So that's kind of like the times where, even though we kind of had that move last Thursday from 388 back up to 401, we sold off the very next day all the way back down. And so those are the type of situations where, even though on the chart it looks good, like to the technicals, that's like that didn't even happen. So I would really like to see us, get back up to that 419 and then see how we react off that. Because if we fail off that 419 level again, then I could see a situation that, let's just say that we fail the 419. My plan is to probably go short there. And then I honestly think that, if we don't break above that 420 mark and then we break back below 400, I'm going to make a bold claim that we could see 350 after that. Okay? So my sequence of events are 419, fail at that spot, And then the next time that we get below 400,
It's a bold projection.
We see 350 before we see 420 after that. That's why, or 423, let's say, just to give myself a little breathing room. Okay, so again, I'm marking it now. It's September 9th. My sequence of events are 418 to 419. We hit that. We fail off that level, and we go back below 400. And the next thing that we see is 355 instead of 423. You know what I mean? Like,
so
I'm saying that
you're projecting like a 20% drop.
If we fail that level. Like, so right now we're going back up to test 419.
Yeah.
If we go and hit, 425 or whatever the hell it is, and then we go hit like let's just say okay. All right, let me give it a little breathing room because I see 430 on the chart. Okay? The sequence of events, it's September 9th. Okay? It's Friday, September 9th. The sequence of events I'm calling for is that we go test 419. Okay? We might even test 425. But if we don't break above 430 and we fail off that level, I'm going to make a bold claim that if we go underneath 400, we will see 350 before we see 430 again.
All right. And now that we've kind of finished up our technicals, what kind of technicals are you using to navigate your way through this whole SPY situation? Can you kind of break it down how you're seeing these levels? I know you put it on Twitter every day, but can you kind of give a little loose explanation on the 423, how you see 430, and why 350 is what you're kind of seeing as the low?
Well, I'm looking on the daily chart, and 430 we obviously hit, but we kind of rejected that area. And across, we have 3 times this year that 420 to 430 was important, and 2 times we bounced off that level, and 2 times now we've rejected that level. So right now, as we go and test it for the 5th time, right now my what's the word I'm looking for? My hypothesis is that we'll fail that level, based on the fact that the prior 2 times we have failed that level. However, if we get into a situation where we get over that and we base that, now we're talking about like 450, is in sight. Because again, and even if you guys have the daily chart pulled up, I can take. So if you guys look back at that high of 479 or whatever it is on SPY, okay, and I take a trend line, okay, and I go right across the top and I hit that end of March high, and then I hit that end of like middle of August high. Basically the trend line that we're creating has us coming up and hitting that 426 mark. And if it were to fail off there, then that trend line would still be intact, that downward trend line. Obviously it's a really massive, broad trend line because, I'm taking it from January to September. That's a 9-month trend line. But so far it's rejected that trend 3 times. And, now that we have enough data points, to actually make that trend, because, it really hadn't tested it since April. Now, if it does get above that trend and hold over that, that's going to be something that I'm going to want to look at. However, at the same token, that's also going to be a key spot. And so where my 450 comes from is that if we fail that level, if we fail that level and then we fail underneath 400 again, I think that it'll be too tough for bulls, because it's kind of like let's think of muscles. If I wasn't able to do 15 reps at 10 pounds, then 15 reps at 20 pounds is going to be increasingly more difficult. And doing 15 reps at 30 pounds is going to be near impossible. That's kind of how I think about this trend line. Like if we weren't able to break that trend line in March near 450, okay, and then we rejected it off and we sold off from 450 basically all the way down to 389, and then we come back up and we test that trend line again at the end of summer, and we reject it again, then again, we're looking at, then this trend line is not only are we rejecting it, but we're selling off hard every single time. And so, like I was saying about the weightlifting, if I'm struggling with 15 reps at 10 pounds, it's going to be so hard to do 15 reps at 30 pounds. Okay. And that's kind of what I think about with this trend line is that, again, if I'm not able to break that trend line at 450, what makes me think I'm going to be able to break this trend line at 425?
How much are you taking into account like the change in volume that we'll experience as summer ends, the blue colored shirts are going back to their computers?
Yeah, well, so that is an interesting part, and that will play a key part in all of this. However, actually, the August sell-off off of that trend line really wasn't comparably as large of a sell-off as the other two times that trend line we bounced off of, and I kind of think that part of that plays into effect with like May walk away. So I'll be interested, if it helps, at this trend line, if it helps or hurts that everybody's back to work for the end of the year. The other thing that we got to think about is that, there's a lot that's going to come up politically. I know that we've kind of had like a little bit of a, what's the right word?
Like a little lull in politics, it's mainly just been Biden doing shit. We need some spice.
Yeah,
some
we
midterms.
really haven't. Yeah, like you figure back in March and April, we had the war in Ukraine, we had inflation. There was so much going on.
Dude,
we had supply chain.
Dude, if Trump runs again, the debates are going to be fucking awesome. Like when he's just like, y'all saw what it was like with the year of a Democrat ran America.
Yeah, and so it's kind of wild, really, to think about all these different things. But this is where I kind of come from with all of this is that, I really think that it's important for us to recognize, that this trend line is there. And just because, we're kind of, okay, so if we do this and we kind of draw now I'm going to draw a horizontal line. And now we just did technical analysis and I'm going to draw that at 389. We could get into a scenario where for the rest of the year, we just follow this massive wedge. Again, is that if that 390 on the bottom becomes support and we bounce off of that, then the rest of the year is just going to be creating this massive wedge on the daily chart. It's going to literally be like a year-long chart, year-long wedge. And whatever way it breaks, is going to be really interesting because it should make a big move. And based off that, based off what I'm looking at, that could be basically lining up perfectly with midterms, which again would be really interesting. So, it's got to break one way or the other off of this next. So right now, we're kind of in no man's land. We're between the 425 mark and between the 390, almost, directly center. And so depending if we break through the 425 to 430 trend line, or if we bounce off, and then what we do at that 390 again is going to be really interesting. Those two things are going to be key for me. Those are the two levels I'm going to have into the back of my head probably for the next month to 6 weeks. Because again, we'll go back up and we'll test that 420 unless some crazy news comes out. But it's what we do at that level. And then again, is that because of the prior two times we've bounced off of that level, I'm right now, my bias is that we'll bounce off of that. And so if we bounce off of that and come down and test 390 again, and let's just say we flush through 390, that's going to be a situation that's really going to interest me personally.
All right. Well, now that we've done our fundamental review, well, I guess I do have one more question about all this. So there's that saying that's, you lose more money waiting for the lows than just playing as it goes, basically saying if you're just going to wait for it, you might as well just play it until it happens instead of just waiting for this massive crash. What do you think about that right now? Do you think that still stands true, or do you think that mainly stands to the experience of the investor?
I think you should always have exposure to the market. It's kind of like real estate guys. If you follow any real estate gurus currently, all of them kind of say something similar. And, it's the question of, hey, insert Furu name. I want to buy a home, but interest rates are up, 4x from where they were at the beginning of the year. What do I do? And you hear them all say the same thing. The real estate market is inflation proof. The real estate market is inflation proof. There's no better asset than a home, et cetera, et cetera, et cetera. Your money is in no better place than real estate. And I kind of think about, that with the stock market, that the one thing is that the stock market's never not gone higher. So I think every time you should have exposure. However, the amount of exposure to me changes based on where we're at. So like right now, I wouldn't want to have all my exposure. No, God, no. Especially when you look at the daily chart and you go back 3 years, I mean, anybody can, go on Google and look at this. If you do that, I mean, you see, you see 218, it only going back 2 years, you see 218 on your chart. So so here at 406, I don't want to be fully exposed. However, I also want to have decent exposure and always be, exposed to a certain degree. So for me, I'd probably have about half my exposure right now. And then again, is that if we went to let's say something crazy, went to 500, 600, or let's just say 500 to 550, I'd probably cut more and only be down to 30% exposure. And then if we went to 750, I'd be at 20% exposure. But again, is that if we hit 500 and then we sold back off to 400, I'd probably add more back. So that's the type of way to where I would cycle exposure based on where we're at inside the current market.
All right, well, kind of moving on to our back to the basics, which obviously we're in fundamental analysis right now. And we just had our first episode where kind of went over the bare basics of it. Where do you kind of want to dive in from here as our kind of subsection 1.1 on it?
So earnings reports are really, really long and really, really confusing. And honestly, I think they do that on purpose to kind of, make it more difficult for the average person to just open up an earnings report and truly understand what's underneath the hood, if you will. So with that being said, I really do think that earnings reports are made more difficult than what they really need to be. So I'm going to give you the ways that I simplify it. And the way that I simplify it is I simplify it in a really, really easy aspect.
And or before we get into it, this is only for is this only for swings, or is this a quick read? Hey, it just came out. I'm looking at it. I'm looking for the goods and bad as fast as I can.
No. Sorry. Yes. So this is really just for anything. If you want to see the health of the company, either for a long-term investment or a really quick, just to check out, how they did on earnings, I'm going to give you kind of 3 things to look at. The first one is going to be their cash and the amount of cash that they burned. So if you're looking to invest in a company, the last thing that you really want to see is them have to raise money. So there's a very big difference between needing to raise money. Well, hang on. There's a very big difference between a company raising money to grow and a company needing to raise money for simple day-to-day operations. And for anybody that's, super new to all this, the one, which is our favorite, which is expanding to grow, is let's take Tesla. Tesla's done 2 or 3 common stock offerings, and the offerings have been to build really insane, really wild, really insane gigafactories, I want to call them. I don't know the exact thing, but basically so that they can produce more Teslas. That makes total sense to me. Also, side note, when they do an offering, it matters what price they're at. Is it higher or lower than the current price? But that's for another episode. But so the next thing you want to look at, obviously, like I said, is that their cash. How much do they need in cash? And so if you don't see anywhere inside their, inside any of their press releases that they're going to raise because they're expanding, and you look at how much cash they have and how much cash they're burning, and you see where every single quarter, the amount of cash that they have just continuously goes down, and the amount that they're spending hasn't gone down, that is not an investable company. Okay, so that's the first thing that we look at. How much cash, what's the burn rate?
What kind of terminology are you looking for, hey, we need to raise money, and also how do you ensure it's for expanding? Like what
that's
words
the thing
are you
is
looking
that
for? Yeah.
Is that like you'll be able to know because they'll say it inside press releases. So every year, typically companies will release investor decks. They'll also talk about it. So, if a company is raising to expand, they'll scream it from the tops of the hills. This goes back
they won't hide that.
No. This goes back to, we talk about it in, honestly, it feels like every episode, but the difference between companies that, all companies, I say this like as a blanket statement, honestly, companies that need to raise, sorry, that is not correct. I didn't take a nap today. What I was going to say was that CEOs and companies will tell you about something that is 10 to 15 years out and only has a 50% chance of actually happening. They'll remind you of that constantly. However, if they're on the verge of bankruptcy, they won't mention it until they're literally filing or filed for bankruptcy. And that's just the nature of the beast. And so if a company is raising to grow, you will know that more than you probably want to know that. Okay. And then if there's a company that, is kind of raising and trying to sneak it past people, it's also about when they raise. So if it's like a holiday Friday and all of a sudden at like 7 p.m., they come out with a common stock offering, that's someone trying to hide something. If they come out with it and you feel like you've, gotten an email, a phone call, a text, and like everybody's telling you about it, that's a company not trying to hide it. And again, they won't hide the reasoning behind it. So like I said, is that the really key things here are how much cash they had last quarter, how much cash they have this quarter. And also, like I said, is that it'll help if you kind of, before the earnings come out, is that if typically how much they burn on a given quarter, that'll give like a really good base level to see how much they're burning. And then that can tell you, did they burn more? Did they burn less? And is it an extreme change? And then the last thing, the last thing I'll say about that is that that's really key. And again, because it's back to the basics, one thing about common stock offerings is that dilute your shares. So again, is that if a company just continuously loses money, it's definitely not something that I want to invest my money into. The next thing that I typically look at is their revenue. Okay. Net revenue and net income I'll put together. And so the revenue and net income is going to tell you a lot about the company's growth. So again, we just talked about expanding through cash. But if this company is starting to gain popularity and starting to really gain a foothold inside the market share, two things: their revenue is going to go higher. And as they become a bigger foothold, they're going to be able to negotiate different things to get their, expenses down. So for instance, I think we talked about it a few weeks ago. Apple is literally doesn't pay rent in some malls because the mall just wants Apple in there. So Apple typically more times than not, doesn't pay rent. And then on top of that, like their Apple stores are like sought after inside malls to attract customers. Where like,
wonder if they can still write off the office space.
They probably do in some degree. And then, but like, let's just say I'm a Henny's shoe store.
Oh, hey, 1 sec. While we're still on Apple, saw this today. If right on the day the first iPod came out, if you instead of buying the iPod, you put that $400 in, which was its retail price, into Apple. You want to know how much that'd be today after the stock splits and everything? $200,000.
What?
So yeah, Benzinga told me so. I know it's true.
So if you put like $4,000 in,
It was,
it'd be $2 million?
400. Oh yeah, so $4,000 would have been 2 million. Sounds
So if I
fucking
put
crazy.
$40,000 in, it'd be $20 freaking million.
I think we talked about it before, where it was like if you did it the day that the Forrest Gump movie came out, whenever he's like, "Oh, I made all my money off Apple," you'd been loaded if you just taken your advice from the
Crazy.
So
So,
you're
So,
on
yeah.
about a huge shoe store.
yeah. So, but if I go and open up inside a mall, I'm gonna have to pay full price, obviously. But again, is that as your company, ideally that you're looking at gets a bigger foothold inside the market, again, is that maybe they're buying in bulk now, and maybe they build their own manufacturer, like their own manufacturing plant. So there's no middleman, they're able to cut costs, stuff like that. You're going to see the difference and the numbers are going to tell that story. And so that's going to be something that I really look for is that, over the last like 3 years, great, our revenue is up 500%. That's great. However, what's our net income off of that? So again, is that, how much are we making off of that? Because if our revenue increases 1,000%, but our net income decreases, that doesn't do me any good. It's all about when we talk about, it doesn't matter how much money you make. It matters how much you take home or, how much you save. And so that's why, I also look at revenue, but I also look at net income. So that's number 2. And then the third and final thing that I look at, and this is more of like a qualitative metric. And what I like to look at is forward-looking everything. So, one thing that I like to look at is who did they hire? Who did they fire? What did they say? There's like a rumor out there that every time that Elon Musk goes on the conference call for a Tesla shareholder meeting, that's never good. So, I just want to pick up on things like that, like again, is that who are they firing? Is somehow the founder getting kicked out of his own company? Stuff
Wouldn't be
like
the
that.
first time it happened to Elon. Or
No.
Or Steve Jobs.
Yeah, or Steve. Yeah, exactly. So there's like things like that where again, like the company's not gonna tell you, "Hey, we just fired our CEO." But if this CEO is, said last quarter that he'll never retire, and then now all of a sudden he's making a quick retirement, why is that? Something's fishy there. So these are all different things that I like to really pay attention to and I like to look at. So like I said, is that, who'd they hire? Who'd they fire? What's their forward looking? If any of you guys saw Doc U on Thursday afternoon, because again, is that the market is forward looking, and so Doc U upped its forward guidance and the stock moved. So again,
I think later, maybe not today, give us some time to
prepare?
maybe go over like a good earnings report and a bad one based on different things. Like, maybe Netflix is one where they said their earnings their forward guidance was going to be really bad. Stuff like that. Maybe we can dive into it and kind of point out, the highlighted points of it.
Yeah, I like that.
So obviously there are people that look at them real quick, boom, 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 boom. They find out what they need, and it's just like, hey, we're gonna play it off of that. Versus like all you're talking about, it seems like it's more of a deeper dive. What is the differentiating factors in different kind of ER readers?
Well, what I just mentioned is something that I think that even if you're going to play it just for the actual earnings report, that's stuff for both long-term investors and quick players inside the game. So when I'm looking at earnings reports, when we're in earnings season, I'm going to look and I'm going to every Sunday, I'm going to flag like 5 or 6 companies that I really think are interesting and you typically make big moves during earnings. So then what I'm going to do is that I'm still going to take a look at all those things that I just mentioned. So again, it's like, what do they potentially have upcoming? What is their average cash expenditure? What's their average revenue growth? Stuff like that. So that when it comes out quickly, if I see something that is an extreme, either good or bad for the company, I can play that real quick. But if I'm an investor, similar to, I think, like the Bed Bath and Beyond kid, like after earnings report, again, I'm going to do a deeper dive into all that. Once all the dust settles, I'm going to do a deeper dive and say, okay, they did this really well. They did this really well. And, but again, is that I think that it's important for both long-term investors and I'll call them like quick scalpers. Because again, for the quick scalpers, it's useful because then you can see the difference in the extremes one way or the other. And the, long-term investors, obviously it's important because, you can see the history and the averages and the medians,
All right. Well, do you have anything else for the first little part of earnings report, or do you want to kind of go into some viewer questions before we kind of wrap it up?
Let's do some questions.
All right. So this one's from Grace. So obviously, I would say ladies first, but we are on episode 3 of doing viewer questions. So ladies on the top 3. So Grace wants to know, how are you able to anticipate the chop of the market when going into the day? I think one we talked about recently was how do you handle the chop? But I think anticipating the chop is a lot different.
Yeah, so every day, and I think this is what Grace is referring to, is that every day I give typically 2 levels for the S&P 500 that I personally am not interested in playing. So for instance, like I'll say like I have no interest in SPY 406 to 410. Okay? And that is the type of way where like I'm not anticipating the chop. I'm just saying that these are the levels that I think SPY will chop at. And so because of that, I have no interest in playing that. Even if there's money to be made, I have no interest because all I want is breakouts or breakdowns.
So instead of anticipating chop, what you try and do is anticipate where the chop's going to be at.
Yes, exactly. And so that's why I'm not going to sit here and some days I do say, so before I'm a hypocrite, some days I do say, hey, I have no interest in playing the first 30 minutes to an hour. You know what I mean? Yeah. But then, like I said, I'm not sitting here saying like, oh, hey, like 9:56 a.m., we're going to stop chopping. That's not what I'm saying. I'm just saying that between these 2 levels, we're inside a range. I have no interest in playing that range. I just want to take the big moves, the meat of the move, either breakouts or breakdowns, and then go from there.
All right. And you just completely just disregard the chop? Hey, it probably is going to happen here, and that's where I'm just not going to play. If it happens and you're not anticipating it there, how do you play that?
So let's just say that for instance, like I said, I just gave the levels. Like, let's just say I'm not interested between 406 and 410. But then let's just say that we get above 410, we back test that 410 area. We confirm
and you're like
that
414 is on the way. Yeah.
Yeah. 414 is on the way. And then all of a sudden we break back below 410. I'll just cut it. And that's and this is where I come back to like why I like my strategy so much is because, I'm going to wait for that support to test. And then once it's confirmed support, that's where I'm going to add to my position. But so let's just say that I get in at 410.20. Well, now my stop loss is going to be like 409.70. But so my stop loss is like, 50 bips, let's call it, 50 cents. And then I'm aiming for $4. That's 8-to-1 risk to reward, and so I really like that risk to reward, especially if you have a win rate. Like my win rate's like 85 to 87%, so that means that, not only is my my risk to reward 8-to-1, but also my win rate is higher. So that's why I'm okay if it stops me out, because I know that that's going to be one of the only times I'll get stopped out inside the next 10 trades. You know what I mean? And again, is that my stop loss is so much closer than my take profit that I'm fine with it.
All right. So that's chop for you. Moving on from that, obviously some shit happened this week. The Queen died. Big news. Did you know how big of a deal it is? Like they have to change out like all the money that she's on. Like this is like a big deal. Like this is like a multi-billion dollar thing. Yeah. Like this is pretty inconvenient. I mean, obviously,
yeah, no.
That's pretty shitty describing someone's death. It's pretty inconvenient.
Yeah, no. So it really stinks. Well, first off, our condolences. R.I.P. Really wild. Really wild that she was really, my parents. She was the queen before my mother was born.
She went through like fucking like 10 like how many U.S. presidents?
Yeah, like
all of them.
Yeah, like a good amount, and which is really crazy because is that like even who's what's his name, Charles, what's his wife's name, Camilla.
Oh, dude, I haven't watched enough of The Crown to know that one.
Well, basically, the last time that someone held the princess, like the basically like the princess's role was Princess Diane, which has been 20 years.
Yeah, they had beef too.
Yeah, and so it's really wild because it just feels like the queen has been just it's just been, and again, like we're young guys, like I said, is that
Richard Nixon met her in 1957.
Yeah, exactly. Like my dad remember the queen being the queen, which I don't think there's many things that the difference between generations can really sit there and say yeah, that's the same. But the queen is literally that thing. I can't off the top of my head, I can't really name anything else. That is.
I'm trying to. This is like Kim Kardashian dying in 6 years for us, dude.
Yeah, literally. Yeah, I mean, like I said, I really can't think of anything like that. But yeah, no, it's really crazy. Again, is that as far as we know, how quickly her health deteriorated over the week. Like that again, is that I'm sure we just weren't told, but it felt like all of a sudden like the queen, is being
she was
watched
sick and dead.
Yeah, exactly. Like really just crazy. But obviously RIP the queen. As Dan mentioned, all the currency has to get changed, which is just madness.
Yeah. That'd be pretty shitty. Like, it'd be like George. I was having to replace George Washington with like The Rock.
Yeah, and I'm sure that I haven't looked into it too much, but I'm sure that I'm sure like the Royal Mint or whatever it's called has been printing for years. I mean, that would really just...
Dude, in the new one, right? He doesn't seem like he's going to last too long. He's pretty fucking old, too.
Yeah,
and then
there's
the next
some pretty
one
crazy
line,
stories
I'm pretty
behind.
sure and then the next one in line, I'm pretty sure is the one who's friends with Jeffrey Epstein. Charles?
No, I think Charles is the guy now.
No. The Epstein one's like the next in line.
William?
No, one sec. Monarchy. What is it? Succession.
Well, so you got Charles, who's now the king.
Right. Yeah. Okay, so so right now
and then you got William.
It's all their titles. After Charles, yeah. Okay, so after Charles, I need pictures and shit too.
Yeah, so Charles is the older one, and then William's the one that looks. I don't know who he looks like. He kind of looks like Chuck from Billions, kinda.
Prince Andrew is the one that was friends with Epstein.
Okay, yeah, I don't even think Andrew's anywhere in line, right?
Okay, well, I don't know, man. Like I said, I haven't watched enough of The Crown, dude. You're gonna have to fucking really hop on Netflix. Maybe this is how they go long on Netflix because The Crown is definitely coming back for another season. Fact.
Well, so basically, to the best of my knowledge, I believe that it goes Charles, who's now the king, and then it goes William, and then it goes all of William's children, and then it goes Harry, and then it goes all of Harry's children, who he doesn't have.
Okay, well, looks like we're in the clear. All right.
Well, so
rest in peace.
Pretty much. I mean, Charles is pretty old. I think Charles was born in 52. Hang on.
Crazy that monarchies are still a thing.
Yeah. Yeah, so King Charles was born in 48. So he's 73. So yeah, I mean, he's pretty old as well. And then like we said, is that William will be king after him, and William's 40. So, I mean, chances are that by the time that William's 60, he'll be king. Because that would make, Charles 93.
It pissed me off like a lot. You
imagine Charles just waits
having
55
to wait
years.
fucking 70 years. You like at that point, I mean, you gotta think he's gotta be pretty happy his mom died. respectfully.
Yeah.
You didn't want to die without being king ever. You know, that'd be kind of shitty if you were waiting for your whole life.
Yeah,
I can't wait to be king.
Yeah, you know what was cool? I was a few videos popped up. I was watching on YouTube. Was her 70th year jubilee? That was freaking incredible.
But I don't even know what that is.
Like Queen Elizabeth, like she had ruled for
Yeah. So it's like a
years.
celebration for ruling for 70 years.
For 70 years, and
I don't think anyone will ever have that ever again.
It really would be wild because especially the monarch has obviously really been.
I mean, you have to time it properly. You got to be like 16 right as you start, live a long, healthy life. Like your mom has to die at a right young age.
Well, and that's the thing is that like nobody currently really has that chance except William's children. And so you would need something absolutely terrible to happen to William, obviously. And then William's first son would be, would turn into the king. And William's first son, I believe, is 10. So I mean,
he's got all the credentials right there, man. That's our guy.
Yeah.
That's Mr. 80 years right there.
Yeah. Well, I mean, so you would need Charles to obviously, die respectfully.
I'm making a lot of assumptions here.
Yeah. Well, that's the thing is that like, so you would need, I mean, Charles would have to, would unfortunately have to die. And then, the next
unfortunate events are happening in this scenario.
And then William, his father, would have to die. And then he would be king at.
You think it's like the 11-year-olds are having to sign the parliament papers and shit?
Yeah, I mean that's
like it's
pretty
2022. That'd be fucking wild. Like, does he
so
know his name?
William's oldest son is like 9 or 10.
Yeah.
So basically, in like for any of this to even have a chance, again at hitting his 70 years, I mean he would basically need, like
he's gonna have to croak soon. Yeah.
Yeah, to William to pass inside the next
family tragedy.
Quite literally. I don't think like truly it's.
Queen Elizabeth had all the fundamentals of
I wonder what they're gonna do to honor her.
Oh my god, dude. Well, let me tell you, dude. My birthday on Wednesday got a lot less fucking important. I guarantee it, dude. They're gonna have the fucking parade that day. Is that
her 12th day?
Probably. I don't fucking know. It's gonna be. I just know they're gonna have parades and shit on. Was my day, but not anymore.
It's funny, everybody's got to stay off social media that day, apparently.
What about all the Instagram stories from me? All right, guys. Well, I hope you enjoyed this. Rest in peace to the Queen. Free Brittany Griner. We love you all, and we'll see you next time. Peace.